What a mess. 5 minutes late starting my stream, spilling my drink on myself. Dogs and cats living together. Mass hysteria. I apologize for the late start to this stream, folks. I was doing my typical pre-live stream freak out, as I am known to do and prone to do. And then I looked at the clock and I said, oh my God, it's 3:03, quick. Had to make a couple changes real quick. Had to bring up a couple windows. But we're here. Sorry, folks. Had to compose myself. Let's do a little bit of math. All right. So what is going on in markets right now? What a mess. Let's get right into it. We're going to shrink my big, fat melon of a head here. And man, I haven't even looked at the window here in a couple of minutes. So who knows? Maybe we fell another 500 points. Looks like the S&P is down 158 points, almost 4% on the day, 3.88% in the red, currently at 3930. The Dow not faring any better. Well, I guess I should say a little bit better, down 1,122 points, or 3.44%. Another 1,000-point down day in the Dow. We're getting too used to these, folks. It's not supposed to work like this. How many is that this year? We got to start a counter how many 1,000-point swing days we've seen this year. And of course, the NASDAQ is leading the way lower. Check this out, down 542 points, or 4.53% on the day. I just spilled more of my drink. Oh my God, what a mess. I'm getting a text message from my moderator saying, WTF, where are you? I wasn't planning on doing this one, folks. And again, if you see a spontaneous live stream from nobody special, it means one of two things has happened. Either I've got fat fingers and I accidentally hit the stream button again, which I have done from time to time, or it means something really bad is happening in markets. And today, it's something really bad happening in markets, as you can see. Let's see what is going on. In the U.S. 10-year Treasury yield is down 75 basis points. I'm sorry, 7.5 basis points, currently at 2.89. Money leaving stocks, money flowing into bonds. Remember, bond yields and bond prices are inversely correlated. If you see bond yields going down, that means bond prices are going up. So people are selling stocks and buying bonds right now. And this very well could be one of Stephen Van Meter's scenarios that he had talked about with some of these automated equity strategies, seeing some kind of trigger, automatically dumping the stocks and running to safety in the bond market. Although, as we've seen for most of this year, the bond market is hardly a safe haven, is it? Look at this chart of bond yields. Remember, bond yields going up as bond prices coming down. So money has just gone up in smoke pretty much anywhere you look this year. It's been a rough start to 2022. And I see Mr. Lloyd Brett. Thank you very much, Lloyd, for the super chat. I appreciate that, sir. He says, what do you think will happen to the market when the Fed officially starts quantitative tightening? Quantitative tightening is not going to be good for markets, Lloyd. And again, thank you very much for the support of the channel. All right. That is going to be sucking liquidity out of markets. All right. Think of interest rates as the price of money. All right. And what happens when the Fed does quantitative tightening? They are destroying money. So let's go to the very basics of economics, supply and demand. All right. What happens to the price of something when demand stays the same but supply goes down? The price goes up. All right. And the price of money is interest rates. So when the Fed starts doing quantitative tightening, that is going to send interest rates higher. And higher interest rates are absolute cyanide poison to the U.S. stock market right now. Absolutely awful for stocks. We have a debt-based society that is dependent, much like a drug addict, dependent on the flow of easy money. So when the Fed starts their quantitative tightening, they are going to make this situation worse. They're going to drive borrowing costs even higher. And that's not good news for American companies. Remember, we've got zombie companies by the thousands that should have, for all intents and purposes, gone out of business a long time ago. And they haven't done that. And the pace that they're talking about, starting at $30 billion a month, and I can't remember the numbers off the top of my head that Powell said, but he hopes to reach $90 billion a month. I think he said he's going to start in June, and I think he said by September he was hoping to be at $90 billion a month in quantitative tightening. Now remember, back in 2018, the last time we were engaged in any form of quantitative tightening, I believe the number was 50 billion a month that they were pulling out of markets. And at 50 billion a month, that was enough to cause that market crash. I guess we'll call it a correction. It wasn't a bear market, but the fall and the early winter of 2018 was a miserable time for stocks, and it was because of that quantitative tightening. And Powell had to abandon that plan. That was the Powell pivot in December of 2018. And what Powell is talking about now is going almost double that rate with quantitative tightening by September, starting at 30 billion in June and then 90 billion by September. So not good. It will definitely not be good for stocks. And again, thank you very much, Lloyd, for the super chat. I appreciate that support, sir. And I've got my man Dakota Prairie. Hello, Dakota. Good to see you again. And he says the mother of crashes has begun. Well, I don't want to trigger any other channels, but I am inclined to agree with you, Dakota. Maybe the cliff, we haven't fallen off of it yet, but we're right there on the edge of it. And hey, look at this 1 year chart of the S&P 500 here. Right now, we are not technically in bear market territory yet. That's an important distinction. All right, we are still in correction territory. We're still just above bear market territory. But this is the S&P 500 going all the way back to roughly the start of 2021. And, look, we had a high. I believe the high was 47.96.56 was the high close on January 3rd of this year. And we are now at 39.32. Now, I know a lot of you folks came to this channel. You found this based on the MMMRI video. So I'm guessing a lot of you guys are Manarino's Lions out there. You follow his channel, and he put out an email today. It was a very good one. If you're not already subscribed to Manarino's newsletter, I highly recommend you do so because he puts out great stuff. He put out today a reminder that we are not in a bear market yet, and there was a very specific number in that email. He put out 38.37.25. All right, 3,837.25 is the level on the S&P that would be a close below that. We would officially be in bear market territory. And that seems like a very specific number. That is exactly 20% down from that high on January 3rd of 47.96.56. So that's the number, folks. If we hit that, if we go to 38.37.25 or lower, and I don't think we hit that today, but certainly it's possible this week, may even see it tomorrow. We go below that, then we are officially in a bear market. And that's one of those psychological things. When we officially enter a bear market, you never know. You could trigger algorithms or you could trigger human psychology en masse. Just closing below that level could cause the market to tank another 100 points. So keep an eye on that level. Again, shout out to Greg Manarino for that one. And, back to your point, Dakota Prairie, about the mother of all crashes has begun. Look, all the way back to January 3rd, right where I got my cursor right now. Let me make sure you guys can see. Is my melon in the way? Oh, my melon is always in the way. My goodness. There we go. Now you guys can see a little more clearly. Go back to January 3rd here. That's a pretty significant correction. Again, still not a bear market. But folks, we could go so much lower than this. I need you to understand, like people say, how low could we go? Could we go to 3,800? Could we go to 3850? Zoom out on this chart, folks. Let's look at a 5-year chart here. We're only down to about where we were in March of 2021. All right. We're still way above even where the S&P was at the beginning of the pandemic. All right. The beginning of the pandemic, we were around 3,300. So we're still way above where we were even before all this money printing started. And folks, we could go so much lower from here. I'm not saying we're definitely going to, because again, remember all that money that they've dumped into the system, all that QE, they're only talking about tightening a little bit. But if we ever get that mass unwinding, that mass deleveraging event that a lot of channels have been calling for years, and that this world is just way, way overdue for, folks, we're going a whole heck of a lot lower than we are right now. So has that started yet? Maybe. Can't say for sure, Dakota. I can't say for sure, but we are definitely heading in that direction. And thank you very much. I appreciate the super chat and the support of the channel. And I also see Mr. Free Like Summer says, here's some SHTF money for canned food, LOL. Hope you guys have your stockpile of food, medicine, and anything you need. I do. I have most of what I need. Medicine's tough because medicine has a short shelf life. So unfortunately, some of us are dependent on that supply chain. So let's hope that doesn't get too froggy. But just about every time I go shopping now, I tend to grab an extra 20-pound bag of rice. I've got a pretty impressive stockpile built up in my place. It's just something, even if the S doesn't hit the F, I think the price is still going to head higher, and I'll be glad that I do that. And to be honest with you, non-perishable food, I've been saying it for a while, probably going to be one of the best performing asset classes of this year. So thanks again, Free Like Summer, for the super chat, sir, and for the little bit of dough for the SHTF scenario. Appreciate that. There's Mr. Mike Binder from Robin RC Models. Mike, thanks for everything you've been sending me today, all your ideas and your research. He says, all good. Tomorrow, everybody has forgotten, and we'll talk about buying opportunities in the media, probably some upside, and then 2020 style crash. You know, they just love to talk about the upside and the buying opportunity, and I especially laugh when I hear people say there's opportunity in China. My God, China is just toxic wasteland where money goes to die right now. More on that, hopefully, to come in the future. I'm working on some China ideas right now. I'm still hashing out, but there are things starting to happen in that country that may not bode well for anybody. More to come on that. But yeah, Mike, to be honest, I turned off CNBC a long time ago, and I don't miss it. I stopped watching it. Everybody on there, you never know, is somebody talking up their book? Is somebody talking up the opposite side of the trade that they're taking? I just got sick of wondering where people's interests lie when they talk to me, and I just turned the channel off, and my investment performance has improved vastly since I stopped watching CNN, and I just looked at the raw data and made my own conclusions. So that's just how I approach it. But again, thank you, brother. I appreciate the super chat, the support of the channel. And there's Mark the Stump Grinder. Hello, Mark. Sends me a super chat with no comment. I appreciate that, brother. Thanks again, Mark, for all your support and for the care package the other day. I really appreciate that. It's good to see all these familiar names in the chat. So what happened today? Some of you guys are probably wondering, all right, what could have happened today? Why is the market down? Now, I didn't really see any one triggering event. I mean, we did have Powell yesterday, and he gave his little speech at that Wall Street Journal conference. It wasn't a very eventful speech. I haven't seen the whole thing. I've been busy as all get out. But he did mention specifically, he used the language soft-ish landing instead of soft landing. He said soft-ish landing. So he's already starting to backtrack from that soft landing idea because there's no such thing as a soft landing. You can't end a 40-year bull market based on easy money softly. There's no easy way. I mean, it's like, imagine you've been addicted to opioids for 40 years, and then you know, the guy just comes in and says, "Oh, it's okay. I can engineer a soft landing from this 40-year addiction." No, it doesn't work that way. It's painful. It's miserable, painful. And there's no easy way to break our addiction to easy money. And Powell is already starting to soften up his language a little bit on saying, you know, reassuring everybody that it's be fine. We've got the tools, you know, Powell's toolbox and all that fun stuff. No, there's not going to be a soft landing. It's not going to be soft. It's going to be miserably painful. Unfortunately, I think the alternative is probably going to be even worse. And they're actually probably going to do the alternative. The alternative is going to be to turn on the easy money again and sacrifice the currency to save the current debt regime, which I think is what they're going to do. But there's a lot of pain between here and there. All right. Some people are already saying that we're only a few weeks away from the Fed turning on the tap again. I don't think so. All right, I talked about this in my live stream last week. I use the cab driver indicator, right? When you get in the back of a taxi and you strike up a conversation with the cab driver, what is he more likely to complain about? Is he more likely to complain about the stock market and the housing market right now? Or is he more likely to complain about the cost of gas going up, the cost of food going up? And right now, I think the cab driver indicator is all about inflation. And the Fed is a political entity. They'll fight inflation because that's what the public is demanding. Soon, not in a few weeks, But I think eventually we'll have enough pain will be created where the cab driver indicator is going to start saying they need to bail out the markets. They got to fix this. The banks did this, and they'll be talking about stocks, and they'll be talking about their house and their assets. All right. That's when the Fed turns the printer on. But right now, all the public anger and energy and angst, it's all around inflation. So they have to keep fighting inflation, or at least appearing as if they care about fighting inflation. We're still a long ways off from that. And man, you guys are really being very nice today. Thank you very much, everybody. I've got my man Harry Dan 2 from Tunes and More. He's Harry Dan 2 on TradingView is his name. He says, forget all the other issues, but even if China was the world's best economy with the biggest returns, I'd never touch it, nor would I. Thank you, Harry. You have no idea when the company party will nationalize anything or straight up just take your assets. Thank you. Harry Dan, you're right on the money. In my opinion, China is uninvestable because exactly why you said. At any given point, you may run afoul of the Communist Party, or the Communist Party, you could do everything they want, and they just decide to make an example out of you for whatever reason. They'll just take what you have, and your investment will go to zero. And look, any American company or anybody who went and bought any of these dollar bonds from China, they're worthless now. China can't pay those dollar bonds back. And just look what's going on in the country right now. You've got the yuan is tanking as the dollar strengthens. That means all those dollar-based bonds that those Chinese developers were already struggling to pay, right? They were already defaulting on these dollar-denominated bonds like crazy. Well, now the yuan is weaker and the dollar is stronger, which means those Chinese companies need to earn even more yuan to convert them into dollars to pay back those bonds. If they couldn't pay them before, they're definitely not going to pay them now. So I agree, Harry Dan. Tunes and More, otherwise known as Harry Dan. I agree very much that, in my opinion, the whole country is uninvestable. Moreover, I would not invest in any company here in the States in the S&P that does a significant portion of its business in China, i.e. a company like Apple, a company like Nike, a company like Caterpillar. I think those companies are going to see their earnings in the toilet because they're going to, all those sales in China, all that big China growth over the last 10 years that's driven their multiples higher. That's all going up in smoke now. It's not only going to cause their earnings to go down, but it's going to cause multiple compression, meaning the stocks will trade at a lower multiple of lower earnings. So thanks again, Harry Dan. I appreciate that super chat and the support of the channel very much. All you guys, thank you. And there is Sell Judge 32 says gold up while market is getting shellacked. Is this a pivot point for metals? I did notice that today. Sell Judge 32. I did notice gold was up, and I was late getting my stream started, and I didn't have time to bring up the chart. I apologize for that, folks. These spontaneous live streams, you have no idea what a scramble it is to get ready. But it looks like gold is, well, it's just negative for the day now, looking at gold. But I did notice it was doing okay today. I'd like to see gold going up on a day like today, i.e. the flight to safety, which is how gold should behave, but that's not happening right now. Gold is actually being sold off a tiny little bit. So no, I don't think this is the pivot point for metals yet. I think there's probably still some short-term pain for metals because we haven't gotten that mass liquidation yet. Can you guys see this chart? You can. We still haven't gotten that mass liquidation in markets where everybody gets margin called and they sell everything in everything in their brother. They sell it all, trying to raise enough cash to keep their trades alive. That hasn't started yet. And when that happens, you're going to see everything selling off in unison, kind of like we saw earlier today. Now, gold recovered a little bit. But I think there is short-term pain ahead, even for precious metals, as people dump that. Now, the flip side to that coin, Sell Judge 32, is that means a historic buying opportunity for precious metals is on the horizon. Now, I can't say what the bottom is. I can't say when the bottom is. That's why I continue to dollar cost average into physical precious metals on a regular basis. And I do that no matter what, because I think, number one, the metals are so ridiculously undervalued right now. Just absolutely ridiculously undervalued. We all know the price is suppressed, that the banks have been playing their stupid games. At some point, this price rigging scheme is going to fail. I thought it was last year in January. Didn't happen. Banks managed to pull that one off. They can't do it forever. They can't, sooner or later. And look, when all the world goes looking for a safe place to park their money, it's not bonds right now. When you have a debt market implosion, bonds isn't a safe place to go. It's certainly not going to be stocks. The housing bubble is going to be popping at the same time. Crypto, people aren't going to be piling into crypto, not with Tether about to blow up along with everything going on in China. So where's left to park your money? You can park your money in cash, and you can eat this 18% inflation that we're currently sitting at, or you could park your money in precious metals. And the precious metals market is not that liquid. There's not that much physical metal above ground in the world, where if any significant portion of the world's wealth starts hiding in gold and silver, you will see a blowout in the price of those metals like we have been dreaming about for years. I think we could see that in the months, if not years to come, but there is short-term pain before we get there. It's not going to happen just yet because right now we still have not gotten that tidal wave of margin calls that's going to cause people to sell their gold to try to raise the cash they need. That's got to happen first. And we're just not there yet. But thank you, Sell Judge. I appreciate the support of the channel. I appreciate the super chat very much. You guys are awesome. There's Mike Binder again, who says, the soft-ish that they scripted it, the other Fed guy used the exact same word in another speech. Clown show. It's just weird. Thank you, Mike. I agree. It is every single word these guys use is scripted. It's rehearsed. It's tested, and they run it through. I'm sure they run it through focus groups, and they tweak the language. And especially Powell, he just sits there very stoically, and those gargantuan fuzzy caterpillar eyebrows of his, they don't even move when he talks. I've said it before, I never play poker with that man because he just shows no emotion whatsoever. But yeah, all these, they trot these guys out. They have Bullard, and he'll go out and he'll play the Hawk, and they got Brainerd, Schill, and Kashkari. They'll go out and play the Doves. It's all scripted. It's absolutely scripted. You're right on the money, Mike. Could not agree more, and thanks again for supporting the channel. Keenan Haywood says, anyone catch the Celtics game last night? The response I get from friends I send your videos to. It took me a minute to realize, you'd send my videos to your friends and say, hey, the world is coming to an end. Dogs and cats living together. Food shortages, banking collapse. Your house is going down in value. Your stocks are going down in value. And the answer you get is, how about those Yankees? Or how about those Celtics? I said, how about those Yankees, Keenan, because I take it you're from Boston if you reference the Celtics game. Go Yanks. Sorry, guys. I grew up in New Jersey. Don Mattingly was my man. But yeah, I get your point. Most people, Keenan, first of all, thank you very much for the super chat and for supporting the channel. Most people, not only do they not know what's coming, they don't want to know what's coming. All right. Once you start to give people the information to where you can actually see the reaction, they start to put the pieces together in their head, and it's more than they can handle. It's more than they want to handle, and they block it out, and they desperately change the subject. And I'm not insulting these people's intelligence. I want to make clear here, I'm not mocking the average person when I talk about this, because I've seen this with my friends, even with family members, people who I really love and respect, very intelligent people. They don't want to know because it's not in their control, at least under to their impression, there's nothing they can do about it. They don't want to see it coming. They don't want to know. Maybe they're better off. Maybe they're happier than we are. I don't know. But I see that in more than a couple of cases. And again, these are not dummies I'm talking about. These are really sharp people. They just don't want to see it coming. So I hear you, man, with that comment about the Celtics game. I get that too, although it's usually the Yankees because, well, go Yanks. Take it easy, Keenan. There's Mark the Stump Grinder again. Thank you, Mark. He says, sold May 20 SQQQ 51 calls. May 20. Wow, you swing for the fences, Mark. You bought May 20. I tell you, I bought some SQQQ calls as well. But man, you got to be careful buying that short-dated stuff. It paid off for you. I'm sure you made some bank on that trade if you bought it anytime recently. But yeah, that is a bold call to buy options. Keep in mind, when you buy options that are that close to expiration, you need to be really right. Because even if the underlying goes in the direction you think it's going to go, you might lose more money to theta decay than you make being right. It's something I've been talking to Devin Bryans. I think I've seen Devin in the chat today. I stay in trades too long, and I tend to buy my options a little too close to expiration. So I do the same thing. But, hey, man, that really worked out for you, Mark. I am still in my SQQQ calls. I have not sold any of those. The last I looked, it was like an hour ago the last time I looked. They were up almost 30%, I think. So I didn't do as well as you did with your Friday calls, I'm sure. But they're doing all right. So congratulations on those returns, brother. I told you guys it was a dead cat, didn't I? Didn't I say it was a dead cat on Friday? I'm pretty sure my thumbnail was dead cat. By the way, I was looking for a picture of a dead cat to put in the thumbnail, and I couldn't go there. People get so sensitive these days. If you put even an animated picture of a dead cat probably would have got me in trouble with the algorithm. So I just put the big down red arrow. Anyways. All right, let's go back to the indexes and see where we're at. It is 3:32. We've got another half hour of trading today. Is there any hope for this market? Now down 174, still selling off even more, or 4.26, still above that 38.37 level that marks a bear market. So again, we're probably not going to get to that today. The Dow is now down 1,260 points. 3.86%, and the NASDAQ down almost 5%, 586 points. Tough day for the NASDAQ. Again, folks, where was it? It was last Friday. It was right before the close on Friday, so it was right around 3:15, right here. That's when I said it was a dead cat bounce. We did go a little bit higher than that, but not too much higher, did we, before this big sell-off happened? So, again, going to take a victory lap on that one. I don't get them all right, but when I do, I do. Let's take a quick look. What's the debt market doing? Are we still at 2.89? Nope, a little lower, 2.88 on the 10-year. People still running for cover in the bond market. I find it interesting that people are still looking to the bond market for safety versus gold. That I find very interesting. I don't understand it. I don't touch bonds. I just never touch this stuff. Why would you buy an instrument? I just got some kind of an error message. I don't know if my stream just hiccuped. I apologize. Can you guys hear me okay? I think you guys can hear me. All right, moving on. Let me know in the comments if you guys can hear me all right or if you can't. And we talked about the housing. The other thing that sent this market lower today was retail. All right, we had a really rough, loud and clear. Good, thank you. Thank you, Free Like Summer and Tony, for loud and clear. And I just bumped my mic, so you guys heard that just fine. The other thing that hit us today was retail earnings. And again, I was scrambling to get ready for this stream, and I don't have my windows open ahead of times. But the big one today was Target earnings. Let's get an article up about Target earnings. Here we go. Barron's is going to be a paywall. Is Market Watch going to tell me I've seen all my... Yeah, Market Watch too. See, this is why I get my articles up ahead of time before I start my stream, folks. All right, let's just go to Target. Target stock. Target reported absolutely abysmal earnings today, much the same way Walmart did yesterday. And let me know if you've heard this one before. Higher fuel costs, supply chain woes, higher labor costs, all contributing to squeezing the margins of the company. Almost word for word, like we got with the Walmart quarter. Which, by the way, I got to send a shout out to the Economic Ninja. He did a video on Monday, right before Walmart reported Tuesday morning, and he pretty much said Walmart is going to have a lousy quarter because of fuel costs, because of labor costs, because of the supply chain. And it read word for word like Walmart's report. Ninja, did somebody leak Walmart's earnings report to you? Is that how you got that one right? Anyways, I jest. Very good call by the Economic Ninja on that one, because he, word for word, exactly how it happened. And then Target comes out today, the same thing. And look at Target. Target, this is one of those companies that you buy for safety, right? You buy it for the yield. Oh, it's a safe stock. It yields 1 or 2%. And then you wake up one morning and it's down 25%. This isn't like some biotech company. This is Target. This is a blue chip safe stock, and it's down a quarter today. a quarter of its value just up in smoke. And this is inflation biting into company earnings. Now, I've been saying since as early as October that my investment strategy was centered around eat and heat, right? Those two words are kind of gimmicky. Yeah, how are people going to eat and how are they going to heat, right? Food and energy, the necessities in this big inflationary environment that, if the price of everything goes up, people are going to spend their money first on what they absolutely need. And that's shelter, food, and energy. All right. And the rent is going up, and food is getting more expensive, and energy is getting more expensive. And at the end of the month, there's almost nothing left in the average budget because food has gone up 15%. And fuel has gone up like 40, 50%. My God, out here in Pennsylvania, it was like $4.86 a gallon yesterday. The $4.86 a gallon. We filled up one of the fire trucks. Tuesday night is work night at the firehouse for me, and we filled up one of the fire trucks with diesel. It was over $1,000 to fill up a fire truck yesterday. Over $1,000 at the fuel pump. And diesel was like $6, $6.80 something cents for diesel. Nobody's going to buy a new iPhone if they're paying that much for food and fuel. Nobody's going to buy a freaking Peloton unless you're congressional staffers, and Nancy Pelosi owns Peloton stock. You see that one? Supposedly Peloton subscriptions for congressional staffers. But what I'm saying here is people are going to spend their money on their basics, their necessities, and any of that discretionary stuff. Luxury goods, discretionary spending, entertainment. We talked about it in the stream Tuesday morning about how people are spending less on hobbies, right? There's no money for this stuff. And so companies that sell this stuff, they're going to tank. They're going in the toilet because people just cannot afford their stuff anymore. And, Target does sell a lot of necessities, but Target tends to be a higher end retailer, right? Right now, because of inflation, more people are being driven below the poverty line in the States. More people are being driven into lower income brackets, relatively speaking, in terms of real wages. Walmart might get some more shoppers, but Target's going to get fewer. All right, so not good. All right, and this trend is going to continue for some time now because I don't see these 50 basis point rate hikes really halting the trend of inflation. I just don't see it, to be honest with you. Maybe, we went from 8.5% inflation read to 8.3%, but I just don't see a 50 basis point rate hike, even a 75 basis point rate hike halting inflation. You know what's going to halt inflation? A massive deflationary market crash, a housing bubble popping, dragging the stock market down with it, or some high-profile implosion in the debt market. That will be deflationary, and that will send so many dollars up in smoke that will cause prices to go down. Now, interestingly enough, when you hear Powell talk, Powell has been talking a little bit about going after demand, that they need to reduce demand in order to fight inflation. What Powell is talking about when he says reduce demand, what he's talking about is making it so you can't afford stuff. Now, if they want prices to go down and they want to make it so you can't afford stuff, how do they make that happen? I don't know, maybe by crashing the stock market and causing mass layoffs? The soft-ish landing that he talks about? I don't know. But I can tell you when these muckety-muck central bankers get together, it doesn't mean good things for us. It's never good for us. And I see Mr. Dumb Money Media. Thank you, sir, for the super chat. He says the VIX is fun to play, but I sold too early. Well, Your Majesty, the king of money, the VIX is fun to play. Although, to be honest with you, I've been a little bit underwhelmed by how the VIX calls have performed relative to how, say, the calls in the SQQQ have performed. You may have sold too early, but I didn't sell soon enough because I still have some of my June VIX calls, which they should be in the black now. Looking at what the VIX has done today, the VIX right now at 31.37. But I probably should have sold those when I could, back when we were 34.35. I also still have some July VIX calls. But to be honest with you, just watching the performance, unless we get an absolute blowout in the VIX, like upwards of like 60, 70, I see these short ETFs seem to be performing better. That, I made money on my VIX calls. I'm happy with the trade, but I think I could have done better elsewhere. I'm still learning. I'm still experimenting with this. And again, I got to send a shout out to Devin Brines, who has been we've been kind of working on this trade together. He's been teaching me a lot about this. And just looking at where the VIX is at right now, this is a channel. I drew this channel a long time ago. Looks like we're still in it. Have we peaked in the short term? I don't know if we go back, to the 35, 36 this time, or is the VIX going to come back down into the low 20s and hang out there for another month? But I am looking to unload those June VIX calls. I'll probably do that in pretty short order here. But I'm glad that trade worked out for you, Your Majesty, the King of Money, and thanks again for the super chat. I appreciate that, sir. And Miracle Oil. Miracle Oil says, nice call, Jack. Is USO on a rising wedge? Is it time to get out? Do you think SPY will retest recent lows? Well, thank you, Miracle Oil. I'm glad you liked the call. Let's see. What does he says? Is USO in a rising wedge? USO, that is the oil ETF. Are we in a rising wedge? Well, that sure looks like a rising wedge to me. Good call. Don't know what a rising wedge is. Let's put some lines here. Let's see. Put it there. Drag that one down. This does look like a rising wedge to me. And we'll put the ceiling a little bit higher there. And is that what you're seeing, Miracle Oil? Is that the wedge of which you speak? I do believe you're correct. Is it time to get out? Well, let me just tell you, with oil trades, it's finicky because oil, you're playing the inflation narrative. You're playing the geopolitical chaos narrative, right? And neither of those issues is going anywhere anytime soon, right? The inflation situation is here to stay, at least until we get that massive crash event. And geopolitics, do you have any faith in our leaders to sort this mess out? Or are you 100% sure they'll make it worse before they make it any better? I am 100% sure they're going to make it worse before they make it any better. By the way, Finland and Sweden joining NATO, probably not good for de-escalating tensions in Eastern Europe. Don't know if Mr. Vlad is just going to take that sitting down or if he's going to start playing games with Europe's energy or lob missiles at somebody else. Who knows? I've been saying it for a while. If Iran gets involved, Iran has been sitting that one out. Since when does Iran sit out a geopolitical conflict? Besides never. So if Iran gets involved and starts playing games in the Strait of Hormuz, this baby is going to rocket higher. All right. So that is one possible outcome for oil, and that's always on the table. So oil is like, a put on our leadership, which that's a pretty safe bet that our leadership is going to suck for the time being, or forever. But they say we get the leaders we deserve. So before you point your fingers at Washington, remember, we get the leaders we deserve. So apparently we deserve this. So that's the bullish case for oil. Now, the bear case for oil is kind of like we're seeing in retail right now. Things are getting so expensive that people just can't afford to buy anything else. Well, the economy is getting so bad in some parts of the world right now, people just can't afford gas. So they're going to use less because they just can't afford to fill the tank, i.e. prices are rising so much, you're starting to see demand destruction. That could happen very soon, like we've got going on in China, right? If China's economy just outright collapses, their energy consumption is going to plummet, and that's going to affect global oil prices big time. That could also very much happen. All right, so I'm kind of painting the two sides of this trades here for you, Miracle Oil, because I honestly don't know which one is going to win out. Right now, we're obviously in an uptrend in oil. And so what I've been doing is I've been buying these relatively short-dated calls. I haven't been in USO. I've been in XLE. I also own calls in DVN, Devon Energy. Again, shout out to Greg Manarino. He's been pounding the table on that one, and he has been right about that one. It's been doing very well. Not so good today, but nothing's doing good today. So what I've been doing is, as these calls have been making money, and man, they have been printing all year, I've been pulling out my cost basis, pulling out a little bit of profit, and then rolling the rest into further calls. And so you have to make sure you're taking profits as this trend goes up, all right? If you never take any profits, eventually you're going to get wiped out, All right, so just make sure, again, not a financial advisor, not financial advice, CYMIA, all that stuff about doing your own research and your own DD, but make sure you're taking some profits because we could start to see this demand destruction at any moment, and that's going to bring this one lower. And, I don't know when that happens. It will probably happen. Anytime we've seen a big rise in oil prices like this, it has eventually resulted in some form of demand destruction. People not going on vacation because the flights are too expensive or because they can't afford it because the food bill is too high. People carpooling to work because gas got up so expensive, so now you have less gas being used that way. That's going to start soon. All right, so make sure you're taking profits on the way up. And SPY, will it retest recent lows? Unequivocally, yes. All right, I think so. I think SPY, that is the S&P 500 Spider ETF. We'll bring that one up. Right, so SPY, QQQ, they're going to mirror the underlying indexes. And as far as the recent low, what was the recent low? Let me look at this chart on SPY. I wasn't going to look at it, but since you asked, the recent low on SPY was 385 or so. Oh, yeah. Yes. I almost certainly we retest that low and then some, to be honest with you. While we're on the subject, where do I think the S&P is going? Real quick, I did a little bit of math before we did this, and a while ago I mentioned that I saw a head and shoulders pattern forming. Let me get my doodle tool out here. That I saw something like a head and shoulders pattern here forming, and that the neckline was right around, I think it was 4,300 was the neckline on that head and shoulders pattern. All right, so using the high of 47.96 and the neckline at 4,300, and that head and shoulders pattern has completed, that says we're going to roughly 3,800 before we catch a bounce on the S&P, or another 116 points lower from here. All right, and coincidentally, I've also drawn these downward channels here. And is my melon in the way? Yeah, my melon's in the way. Melon's always in the way. I'm sorry. That would put us about 3,800, which right now is almost right on this bottom channel, where that could be where we catch a bounce. So as far as like short-term price target for the S&P, I'm going to guess we catch a bounce somewhere around 3,800. All right, that's the earliest I see this thing catching any kind of a bounce. All right, and by catching a bounce, I mean any significant move higher of, more than 100 points or so. All right, I think we're going to 3,800. And that would just be, that's the measured move from the neckline to the top of the head on that head and shoulders pattern, and then you subtract that difference from the neckline, that takes you down to about 3,800. So thank you very much, Miracle Oil, for the super chat and for the support of the channel. I appreciate that very much. I hope I answered your questions. And there's my man Cheeseburger. What's up, Matt? He says, driving to work, but did you read Creature from Jekyll Island, by the way, by Raytheon? I have not read The Creature from Jekyll Island. It is on my list. My reading list is getting very long because I have a lot of books that you guys have been sending me, and I spend all day reading charts and Bloomberg and U.S. News and World Report and Yahoo Finance and everything else. Doesn't leave a lot of time for the old Libros, but I definitely have a couple of those on my list, and Creature from Jekyll Island is on there. By the way, by Raytheon, ticker symbol RTN, I believe. Is that Raytheon? You're probably right about that. No, what is Raytheon? I thought it was RTN. RTX, I was way off. RTX is Raytheon. That one, probably a safe bet, Matt, because the U.S. is going to sell a lot of missiles in the near future as more NATO membership. NATO is arming up. Europe is going to be spending more on defense. Again, I am 100% sure our leadership is going to make this mess in Eastern Europe worse before they make it any better. And that means Raytheon's probably going to sell more missiles. So you're probably right about that, Matt. I think that is probably a safe bet. Down a little bit today. It's being dragged down by the indexes. Again, when you get these big down days in the indexes, it tends to bring everything down in unison. So don't look too much into that one being down today. But thank you again very much. I appreciate the super chat, sir, and all the support of the channel. Let's take a look at the indexes right now. Looks like they are just barely off their lows of the day, but not by much. Currently at 39.19, down 100, almost 170 points for the day. There's 170, or minus 4.16. The Dow, again, just off its lows, but not by much. Down 12.18, or 3.73%. And the NASDAQ, the big loser of the day, down 568 points, or 4.78%. Again, I called that dead bounce. I said it on Friday. I did not buy that move in the NASDAQ. Folks, you need to be aware that volatility is just the way of things now. Like these, get used to these 1,000-point swings in the Dow, get used to these 500-point days in the NASDAQ. And just because, we could wake up tomorrow and see a 500-point up day, and then the day after that, another 500 down. All right. So don't be tempted to fall for these muckety mucks on CNBC who come in and say the bottom is in, buy the dip. All right. I don't think that is what's happening here. I think we are in this steady grind lower, and we're going to keep grinding lower until we reach some trigger point that is going to trigger some algorithm that is going to cause a rip your face off sell-off in these markets, and it's going to bring everything down simultaneously. And by the time you read about it, it is already too late. All right. I think that is coming. If you would have asked me a few months ago, I would have told you it should already have happened by now. Okay. So, perma bears are going to be right eventually, I guess, the broken clock thing. But I feel like we're right there. Maybe that 38, 37 level when we actually officially enter a bear market, maybe that's what triggers it. Maybe it's a more psychological level of 3,800. Maybe it's just some algorithm that says, you know what, I've been looking at these 30 prints in the VIX long enough, and it's time to sell and run into bonds. I don't know what is going to be the actual trigger, but that is coming, folks. I just want to take one more look at the VIX. Speaking of that, it is now at 31.14. That is the S&P 500 Volatility Index, sometimes referred to as the fear gauge. Plenty of that to go around today. We're now 6 minutes away. We've got 6 minutes left of trading. Let's see what the precious metals are doing right now. Actually, we haven't looked at commodities at all today. Let's bring up the commodity markets. We have got gold is just about even for the day, still in the red. Silver down 1.6%. Remember, silver is about 50% monetary metal, 50% industrial metal. And on a day like today, the industrial element is going to drag silver lower. Silver is used in the manufacture of electronics, electric cars, solar panels, all that stuff. A lot less of that stuff getting made could equal a little less demand for silver. And also, silver will not be immune to the same liquidations and sell-offs that's going to bring gold down when that margin call starts and everything else drags it down. That being said, the base metal space as a whole, I just don't like the base metal space right now. All right, copper, aluminum, iron, zinc, nickel. Right, I know there have been some really good trades in those markets, like that big rally that happened in nickel. But all these industrial metals, keep in mind there's some very, very bad things happening in China right now, and China is the engine of consumption in the world. China has consumed, both through its ridiculous amount of buildings that nobody needs and nobody's going to live in, all the way up to all the factories in China, right? China is this engine that consumes vast amounts of raw material, and it eats about half of the world's copper, concrete, steel, aluminum, all that stuff. China's economy is going down the drain in a big way fast. All right, now China absolutely stifles the flow of information. They lie about their statistics. I mean, if you think the media and the government statistics in the States are BS, you're going to love China. All right? Because China just absolutely lies through their teeth. But they're not going to be able to hide what's coming. And just because we don't hear about it, because remember this? So if these American companies want their movies to get approved by Chinese censors, number one, they have to have a scene in China in them. Just about any blockbuster movie has to have at least one scene in China. That's interesting. They have to have one Chinese character. Can't say anything critical of China. and your company better be in the good graces of the CCP. And that means American press is going to be hesitant to report on this too. But there are very bad things happening in China's financial system right now. I'm still working on researching some of it. I hope to have more for you guys on that one in the days ahead. I'm still working on that one. But suffice it to say, China is this engine of consumption of base metals, and that's going away. All right, China's not going to be building. You're going to have a slowdown in industrial activity worldwide. That means less steel, less aluminum, less copper, less zinc, less nickel, all that stuff. All right, so while I am generally bullish on commodities because the higher inflation means higher prices for raw materials, I am very much less so on base metals. I've been saying that for a couple of months now. Interestingly enough, most silver comes out of the ground because people are mining copper or people are mining zinc. All right, so if we do get this big crash in the base metals that I think we may be due for, that could limit global silver supply severely because there will be less silver accidentally coming out of the ground while people are looking for copper or while people are looking for zinc. So that would be very bullish for silver if we saw that. But again, you have to balance that with the fact that silver is also an industrial metal. Less electronics being built means less silver getting consumed. My personal opinion is that the monetary demand for it will outweigh that. All right, we are now 2 minutes away. I hadn't looked at energy today. What do we got right now? WTI is down 2.5%. That's West Texas Intermediate. Natural gas looks like one of the few greens in a sea of red right now. Natural gas at 8.32. All the base metals are down. Agricultural commodities are down big today. I don't think that's going to last. I think agricultural commodities should bounce. Wheat just getting absolutely brutalized, down 3.6%. I did buy some short-dated calls in wheat this week. I sold 3/4 of them yesterday for a profit, but I should have sold them all because that little bit that I held on to is probably going to make that trade a bust now because wheat is down big today. Again, it's dangerous when you buy that short-dated stuff, folks. You got to make sure you're not playing with money that you're not willing to lose. Corn is also down today. Again, I still have long-term bullish bets on both wheat and corn. The situation with fertilizer, the situation with the late planting season here in the States is going to drag corn higher. And absolutely dreadful winter wheat crop here in the U.S. I think that's going to drive wheat prices higher also. We are now 3:59. We have got 1 minute left in the day. Let's see what we're at. Do we rally a little bit in the close? Not really. Looks like 39.22. It's going to close down 4% for the day. Although we didn't drop off a cliff like we could have to close the day, so it could have been a lot worse, folks. And I am getting all kinds of text messages from people and emails from people. Guys, I thank you for your ideas. They do kind of throw me off my game while I'm streaming, though. All right, 4 o'clock. Markets are closed. Thank God for that. God knows what would have happened if that day went on for another hour. Final tally. S&P closes at 39.24, down 164.67 points, or 4% for the day. That was the S&P. The Dow down 1161, just over 3.5% for the day. And the big loser is the NASDAQ. That compression in big tech continues, down 566 or 4.73%. And the 10-year Treasury closed the day at 2.886. So tough day, folks. Again, volatility, it's here to stay. Get used to it. We may see a lot more of these spontaneous live streams in the future because I see a big day like that. Again, if you see a very sudden spontaneous live stream from me, that's because either I fat fingered the switch and accidentally live streamed, or it means something really bad is happening. Oh, and by the way, I have to mention, I am going to be in San Antonio next week. Got a call from the Economic Ninja. Him, Chris Taylor, myself, we're heading to San Antonio next week. We are going to be getting in on Friday the 27th. And we're going to be at the Embassy Suites Riverwalk in San Antonio. There will be more to come. I'll give you guys more details about that. But if you guys are in the Texas area, anywhere near there, or if you feel so inclined as to travel, we're going to just be hanging out in the lobby, doing a meet and greet with some subscribers. And I don't know if you've ever been to any of these events. I've met a lot of you guys at these events before. They're a good time. They're a really good time. You get to meet, get to talk in person. I always learn so much from you guys. It's a good exchange of an idea. This is going to be a free one. No tickets, no nothing. We're just going to be hanging out in the lobby. So more to come on that. I'll talk about that on my live stream on Friday at 3:15 p.m. Eastern Time. And all right, guys, I think we're going to call it there. Thank you guys for joining me. Thank you for all your time, for your super chats, for your support of the channel. Thank you to my Patreon supporters, guys. I really appreciate everything you guys do. I could not do this without you. There is a link down below to the description of that. If you feel like there's a link to that in the description down below. Got my wires crossed. If you want to check that out. All right, guys, we're going to call it there. Thank you so much for your time. Till next time, live small and dream big.